Hey traders, Chris Buss here with Traders Profit Compass with your midday market pulse for Tuesday, January 4th. It's 1:20 in the afternoon as I'm starting the video. Okay, I wanted to bring you guys up to date on where we're at. Quite a few significant developments, especially in the NASDAQ. Let's take a look at what's happening, and I'd like to show you some levels and stuff to watch out for in the afternoon session. We had a sharp jump in rates. We have broken out above this 1.64 level up into this range. Remember, our high for the cycle was like 1.74, so that's up here. So we've broken out the talked about rate sensitive issues. All your high tech stuff is going to be really sensitive to rates, or has been in the past, and proven to be this morning. So let's take a look at it. SPY, not a ton of damage. We're still holding above this 475 breakout area, which is good. Again, it's a very diverse index. So you've got staples, financials, other things that, besides tech, that are helping hold it up. And obviously SPY has, quote, more real world economy stocks than the tech heavy NASDAQ. So we'll see that in IWM as well. But I still want to show you a few levels. Now here on the 2 hour, we have been watching this bull flag area. I think the line in the sand for me, at least short term technically, is this 475. You lose 475 this afternoon, and I can almost guarantee you're going to come down to this gap here at 472. You may see a little bit of bounce there, but after it's lost 475, why not fill the gap and come down here to 470 to test this breakout area, which would be my expectation if this were to break this afternoon. But as of this moment, what I would expect is, we're here in the middle. It could go up and test this upper level here, 478.50, 479. But technically speaking, looks like a fake breakout, right? We've seen this movie before. You can come back and fill that gap. That's fine, but it just kept on going, and that's never a good look when you break out like that above a range. You would have hoped and expected that to hold, and it didn't. So it came down. I think the path of least resistance is probably down here to 475 this afternoon. If some more sellers come in, at least. So if you're not in, that's your objective level that you're looking for, either to come down here and test this 475 again at the bottom of the box, or to gather itself and break out. I wouldn't want to be trying to get too cute right in this area. If you're not in and trying to pick a spot, I would just wait to see if more sellers come in that'll bring you down to an objective level, or break it out and have this be kind of like a fake breakdown, gap fill, overshoot, blah blah blah, and then break out. You're not going to miss a thing. If the breakout is real and it's durable, you're going to be fine. But if you get long here, and then afternoon selling comes in, you'll just get run over. So why not just wait till you get a very objective level with a lot of support. NASDAQ, different story. We had this double top look. We thought, this morning with the move higher, we were looking forward towards a move to break out over this 404, 405 area. Got this really nasty candle here. Here was the morning move, and then they faded it. And your signal, as it were, to either one, get the F out of the way, was this breakdown below 400. Your second opportunity was the break of the prior low. Remember, a break of support is a sell. A break of the prior low is a sell. Whether you sold it or not it's irrelevant. I'm just telling you what the technical trades were. And now we're down here at support, and I mean, on lower time frames, it looks like a little bear flag, and now it's starting to break down. And this 394 and a half, 394 level is really, really important. Why? Because you've got this large volume over price value area. You break below this area, going to be coming down to 390, 250-ish area, 392. And then below that, you've got the rising 50. Remember here on the 2-hour chart, I don't know where my annotation went, but remember on the 2-hour chart, the gold is your 50 EMA off of the daily chart. So we're I want to say mission critical, but you got to admit that's a devastating move in just, a couple of hours. And so we've got this rug pull, and now we've got something to me that looks like a flat bear flag with the potential of, this breaking and sending it down towards 390, something like that. So get your bearings calibrated. I don't think this is a time to step in and try and be, a hero. You can take a shot, if this holds and it looks like you're going to get a bounce, but be ready to flip to the other side, because, that's a lot of selling in a short period of time. And with rates high and with all the gains that have been, on the board, and people that didn't want to sell in December and, pay taxes, well, that's past. We're in the new year now. So anybody that was sitting on a bunch of gains but didn't want to take that tax hit in 2021, they're sitting there, okay, that's my cue. I'm just trying to get into the psychology a little bit, and, have you have an appreciation for this sell bar, which was, quite dramatic. And now we're not really getting, at least at this point, any kind of, big bounce out of this flag. Now, one thing you might want to look for, if you are looking for a bounce, is this 396 area right here. And you can see that if we recapture that level from below, then we may get, a more pronounced rally. But again, where's your, identify your overhead resistance, and that would be right here at 398, where you've got this prior low. So, if you can recapture 396, you can try along there, recapture 398. That would be another buy for a look back up to 400 if it's going to rally. But you see this flag breakdown, and you see, 393.50 break. There's not a lot down here to hold it. There's not a lot of technical support. So have your ducks in a row as far as the lines in the sand that you want to look at, and be ready. Be really flexible in your thinking is one of the things I want to drive home. And don't get locked into bull mode or bear mode. Up here, when we were breaking out or recapturing that level, it was appropriate to be looking to the upside. Why? Because you recaptured the level from below, and that's usually a good buy, but they reversed it, and that's trading. So you got to have your stop in place and then honor it, and then you don't have to take that pain. And that's, as we all know, you ignore a stop at your own peril, and then that's when you take the big hit when it just keeps on going. So anyways, I hope you didn't get hurt by that bar. So let's go on to IWM real quick. Much less pain. There again, you've got real world companies. Not a lot of exposure to tech. I mean, you've got banking, you've got, industrials, you got all these names exposed in the real economy, and that's not real rate sensitive on IWM. So when we look at this one, I mean, yeah, there was a bar, but they bought it right back up, and now they're right back here at the gap again. So very little damage on IWM. You see the levels of the gap, and then you've got the 50 EMA right here in gold. So here it is on the 30-minute chart. You see the action. We actually had this level here, like at 223.75, where you had that prior low. It went down to it, but didn't, no closes below, just a little peak, and they bought it right back up. So no big damage done. Facebook, little fake breakout of the channel that we talked about above 340. We said that was a good long, and they reversed it. So you had your stop in place below 340, dropped back into the channel. What do we always say? You drop, you break out of a trading range, which is a channel can be treated the same way. You break back into the channel, and the target is the bottom of the channel. And it basically found that here at 334. That's your next level to watch, 334. That's going to be your afternoon pivot. And if it loses 334, then you've got 330, and then you've got 327, and then you got 324 down below if they, really, really go after it. So 334 is going to be important to watch in the afternoon session. Apple. What does this look like? Looks like a fake breakout. Breakout to all-time highs. They reversed it, came back into the range, came right back down to support, right down here at 179. Where's your next level of support? This 177.50 area where there was good support the other day. On a breakdown from this level, you'd be looking for the prior lows. And if those prior lows get broken, you got one last chance here at 176. Otherwise, you're going to be coming down to 173.5. So just, the levels are all laid out for you. Don't get married to this thing. I do not like the fake breakout. You've got a bear cross on the hourly. You've got a drop below 50 on RSI. Don't like that at all. So be careful right here on Apple. Don't like the fake breakout at all. Tesla. We've seen this movie before as well. Reach up to fill the gap. Then they reversed it. And now they sold it down hard. What do we say? First try at a gap usually holds and you get a bounce. And now we got that bounce. Came right back up to this 1170 level. Looks like, this little bear flag look. Be real careful. I mean, it's an outright short. If it goes back into this gap again at 11, 11:35, 11:30, wherever you have it exactly marked. And you can see right here, this is a live chart. So we had a touch up here at 1170. The next candle came up to the exact same level, and it looks like it just got rejected there. So watch for a break below, because that is a big, big gap from 1135 down to 1060. That's, $65 or $75 that we talked about this morning. If they go after it and they go back into this gap, you got to be thinking gap fill. As strong as this was, you got to follow level to level and don't get married to any kind of a narrative. Microsoft, bear flag, came up, broke the flag, came down, 334, came down to this 330 level, which was the prior low, and it broke. So now we're sitting here at 327. Your next downside target is 324.5, then 322. And really, it doesn't take much of an imagination to look at this bear flag action. You've got a leg down, bear flag, then you take that measurement and you add it on to the bear flag, and it looks like coming right back down towards that 319 area now that the flag has broken, executed, taken out the prior low, and now looks like it wants to break this 327. So anyways, fast turn of events, guys, fast turn of events. Amazon, same thing. Levels aren't quite as perfect as some of the other ones, but reach up here to 34.25, got rejected, came right back down. We had a good level here. 33.80 was definitely shortable. Why? Because you've got a large volume over price value area there, and then once it broke that level, looks like it's headed right back down to 33.40, has broken that. So last stop is the prior low right down here at 33.15. So you got to have that in your sights and see what price does right there at 33.15. You certainly don't want to see it break below, because then you've got this big trading range that runs from 33.15 all the way up to 34.40. Call that 125. You break this low, break the bottom of the box, your measured move target is 125 lower, right? Because you broke this big trading range, $125 wide. So watch out right there at 33.15. And I'm just giving you the targets. It's not a prediction. 33.15 is support until it isn't. So if it goes down there, find support, then it's support. Don't try to front run that signal. So anyways, go level to level. And if you're feeling ambitious, it's always objective to try a long at the bottom of the box. Just have your stop, in place with the amount you want to risk. And then if you get stopped out, you got to flip the other way, right? Because then support will have been broken. You would have been stopped on your long, and then you can be short against 33.15 with a stop just above. So, Google. Same kind of look, fake breakout. I would have thought I mean, that was a solid breakout until it wasn't. So you got a breakout above 29.15. They came back, stopped you out, and now we're down at the bottom of the channel at support at the prior low at 28.70. It's got to hold. 28.70 has got to hold, or else, we go lower. And you've got the lines right here that would be the targets. So, anyways, we went down for a touch right there. You can see it went down to match that prior low to the penny. So now that is the line in the sand for longs, 28.70. And we'll see if price can gather itself and move back up. You've got a line here to recapture at 28.95, and then you got some downtrend resistance at the top of the channel and also at 29.15. Netflix, not good. Why? Broke the prior low. Now I don't have the daily chart. Well, I do. Hold on, see where we're at on the daily. Yeah, we're coming right in to the 200 right here at what is it, 579. I would not mess with any kind of short at this point. You've got the 200 there, and you'll have bigger fish to fry if it loses to the 200. So I wouldn't get too excited about that breakdown on the 60-minute chart. There's not enough there to work with, and you got big support coming in on the daily chart at the 200. So let that one go. Let's see if it can hold the 200. If not, we got the levels down below that we can key off of for a short. We would anticipate a move down to 560. And then if 560 breaks, you got the big $90 range where you had the breakout, the back test, and a fail. It would be down back in the soup, down in this $90 range. And then you got to really watch the downside. Really disappointed in semis. Came up to this prior high, looked above, and then failed. Looks like we're putting in a bounce. Your line in the sand is 308. Cannot lose 308. And your if you didn't buy 308, your next level to buy is 312.50. Using the same rules that we always have. Key level recaptured from below is a buy, but just keep in mind you got a lot of resistance there. It would not surprise me, and it shouldn't surprise you if we were to come down, find support, back test this 312.50 breakdown area and have it stall here. So if you're just looking ahead, if you see price rally into 312 and you get, a couple candles that cannot get through, I would not be shy about trying a short there with a stop just above. Sent out a note about ARK, and that was about, I don't know, maybe a half an hour before they really pulled the rug. I really think that it's over for Ponzi, over for bubble stocks, over for high valuation stuff. And, like I said, nothing against Kathy, but she's done a great job creating baskets of just those items. And so now you can see here losing the prior low. And this is a daily chart. This isn't an hourly chart. So this is kind of a big deal that you get a close below the prior low. That's a short. So you can be short against 39. And, we had a big move. We had a back test. We had a little, stabilization here with the Santa rally, if you will, and now things look like they're reverting to form in a rising rate environment, that is kryptonite to high valuation names. An inflationary environment is kryptonite to those names as well. So just from a fundamental standpoint, pretty bearish on the Ponzi sector, but also technically. I mean, whether you even think about technicals or not, whether you think about fundamentals or not, look at the technical picture. You've got a breakdown exceeding the prior low, and that's a sell. So that's looking rough. This is ARKG on the weekly. I've been short that. Breakdown, little bear flag, starting to head down again. I think it's ultimately going to break this 55 area. You can see that there's a level of support here. I'm sticking to my guns and looking for a move down towards this area. And then ultimately, I think the grand prize is a break below like 54, because there is nobody home down here. And if things really get rolling downhill, that's going to be a nice trade. Here's ARKK, right at the line, right here at 90. You get a break of 90, you've got at a minimum $10 trading range back up to 100. So I'd be looking for 80 right out of the gate. And if you really want to think about it, you've got a first leg down, a flat bear flag, and then second leg down. And that would project way below 80. So I would be watching 90 like a hawk. And here's another idea. Remember the big gap below on Tesla? ARK is loaded with Tesla. So if you didn't want to play those $1,000 options on Tesla, if that's a little bit too rich for your blood, a little bit too rich for your account, use ARKK as a proxy, because if Tesla is falling through the floor, I can assure you that ARKK is going to follow suit. You get a breakdown below 90, that gives you a perfect level to shoot against. And I would be looking to the downside, especially if I got a confirmation from Tesla that that big $65 gap is going to fill. So I like that trade. And then to wrap up, you've got ARKWeb, ARKW here on the daily. Same thing. Attacking the prior low at 115. You've got, a sizable leg down, a little bit of a consolidation area. You get a break of 115. It's over. It's over. Well, I hate saying stuff like that. I don't know why I do it occasionally. Rather than saying it's over, let's say you can be short against 115. And if it plays out, it's going way down. If you get stopped out, if it pops up to 116 or 117.50, wherever you set your stop, get out of it. Discretion's the better part of valor. Don't try and prove you're right. Just go by the technicals. And if it gives you a little head fake up and you get stopped out and then it breaks 115 again, you get short again. So, but I think the odds are that lower is definitely the path of least resistance. Okay, I hope the midday update helped you. I hope you respected your stops. I hope you were able to make a little money on the way down. But even if you didn't, your first obligation is not to lose money. So if you were long on a number of items, a number of tickers, your first obligation is to get out and stop losing money as those levels break. And then if you can compose yourself and put on an objective short, then all the better. So I hope that helped. If you're new to the channel, welcome. Hit the subscribe button, hit the alarm bell, go over in the show notes, join our group. There's a link there where you can drop in your email. Got lots more of these levels, lots more trading ideas headed your way. I hope you're along for the ride in 2022. I'm looking for a good one. I think there's going to be a lot of active two-way trading. For instance, I've already shared my ideas on the Ponzi bubble tech sector. Almost the exact opposite in real world companies. Commodities, inflationary environment. Got long coffee this morning. Oil is on the rise. Financials are on the rise. So there's nothing better to have the right shorts and the right longs in a two-way market. And it's been a one-way market forever with all the liquidity. But like we talked about on the video this morning, there's a hole in the pool and nobody's running with the fire hose to fill it up. So as that liquidity drains, and if rates continue to rise, that's going to benefit certain sectors and it's going to destroy other sectors. So this may be setting up for a perfect time for a long short portfolio. And that's a big change to what it has been over the last few years. So readjust your thinking if you've been a long only guy for the last however many years. That's been the right trade, but markets change, so we got to change with it. So hope it helped. This has been Chris Buss with Traders Profit Compass. Talk to you next time.